Did you know that Calgary home prices are expected to climb only slightly, according to Royal LePage? I put the article in the description if you care to read for it. It's kind of funny, but let's actually dive into the numbers and not speculate too much. The Calgary real estate market is absolutely going through a pullback right now. I expect to see this pullback going for at least the next 6 months before we start to see any major activity in the spring market to maybe offset some of that continuous month-over-month declines. Unlike other markets in Canada, Calgary is holding up relatively well for the most part. My name is Fyfe, your Calgary real estate agent. If you're looking at getting some information, there is a lot of links in the description. So I encourage you to go through and see all of the information that is in there, like booking a call, understanding what your home's value is, and trying to find some sold information throughout Calgary. But let's go in and look at the numbers. Sales are down year over year, but up over last month. Last month, we only saw 1,700 sales, where this month we saw almost 1,900 sales, which was slightly surprising. New listings did slow down, which was expected, right? October, November, December, January, you're probably going to see a slowdown of new listings. We're actually right on point of where we were last year with new listings in the month of October. Inventory's up quite a bit, right? Last month, it was at 7,000. This month, it's at 64, but last year, it was under 5,000. So obviously, there's a lot more to choose from. There's about 1,500-ish new units compared to last year. Months of supply actually dropped quite a bit. We were at 4 months of supply, definitely, buyers balance territory. Now, months of supply actually fell to 3.4 months, which is clearly a balanced market as a whole. We have markets that are 2 months. We have markets that are 8 months. So it's actually equaled out to be a pretty balanced market right now in the Calgary real estate market. Kind of surprising for a lot of you out there, you naysayers. This is a quick overview of, this is a quick overview of the last 7 days, right? And this just shows you the residential market as a whole, right? You've got new listings, again, last 7 days. You've got 640 new listings. You have a lot of price decreases, clearly indicating that sellers are chasing the market. You have quite a few pendings and quite a few solds, still indicating a pretty strong moving market. Expired and terminated as well, showing that there is definitely signs of slowing down. Now, I will be touching on this every single month. I'm actually going to start to save these screenshots so that we can touch on them for the last 7 days of the first week of the month, just so we can have a little bit more of a data point to choose from. Now, let's go and look at what the Calgary Real Estate Board has written about this market, and we're going to continue on and looking at the data. Inventory levels eased over last month thanks to the combined impact of monthly pullback in new listings and monthly pickup in sales. With 6,471 units in inventory and 1,885 sales, the October months of supply returned to 3.5 months after pushing up to 4 months of September. While both row and apartment style properties continue to report elevated supply levels compared to demand, conditions remained relatively balanced for both detached and semi-detached properties. Year-to-date sales in the city totaled over 20,000 units, down nearly 16% compared to last year, but still in line with long-term trends. Much of the decline in sales has been driven by pullbacks for apartment and row-style homes. Improved rental supply and easing rents have slowed ownership demand for apartment and row-style homes. It is also these segments of the market that have seen October inventories reach a record high for the month. Excessive supply for apartment and row-style properties is weighing on prices in those segments more than any other property type, influencing total residential prices. So, you're in apartment or townhouse market, you are definitely in a buyer's market. If you are in a detached or a semi-detached market, you're more or less in a balanced seller's market. Okay, let's remember that when we're going through the numbers. Now, let's continue on here. Looking at the total residential, right? So this is all property types kind of morphed into one stat. The total residential price is about $568,000. Now, again, there is attributes for this benchmark price. If you go to total residential, they are right here. Composite City of Calgary. This is what you would get for that price, right? You want to make sure that you understand that. We're down 4.1 from last year, which is about a $25,000 decrease. We're down about $5,000 from last month, which has been pretty stable decline for the last 3 months. And we're down about 7% from the peak that we saw in June 2024. So we're about a year and a half past the peak, and we're down about 7%, right? We were at 608, now we're at 568. So we're definitely seeing a nice, comfortable pullback, slowing down this market at a pretty stable pace, right? So when we start to look at this, right, we can see that just nice, steady decline in price point. We're not seeing any dramatic drops, but we're seeing a nice, comfortable slowdown. You can see inventories have been around that 6,500 units per month for the last, let's call it 6 months. And sales have been relatively stable as well, even seeing a small increase from September to October, now most likely going to continue to drop going into December, into the Christmas, and then picking right back up in the new year. So with that in mind, here is the same information, but a numerical value. The biggest things I'd like to look at on this are the days on market, right? 43 days. One of the slowest that we've seen in quite some time. Obviously, December of last year, which is usually the slowest time of year anyways, is at 44. We're already at 43, probably going to get into the low 50s as we go through the holiday season. You can see that the benchmark price has dropped, right? 568, where the actual median price is increased and the average price is increased. You can see that the average price is actually similar to what we saw in June, indicating there was more expensive homes sold in the month of October than they were in the last 3 months, right? I wonder if that could be because maybe there was a rate announcement, right? People are holding off. There's potential that they might have been holding off for that long to see if they were actually going to do the rate reductions, which was expected. And now they've jumped on those opportunities. So we did, the average price was all the way down to low sixes. Now we're back up a little bit to 642. Now, when we look at this is kind of interesting. It's a lot to consume in one slide. But what I would say is two things. One, this rate of reduction has flattened, meaning we are still seeing 3 to 4% month over month declines, but it's been pretty steady, 3 to 4% over the last 3 months, indicating a balanced market. Last month, I did note this, thinking, oh, maybe we broke through that ceiling where we jumped to that 4 months of supply, but then we quickly came right back down to about 3.5 months. Again, indicating more of a balanced market. It's interesting because, again, I think that potentially maybe people were holding off for that rate reduction announcement just to see how that might affect the market. That's one minor indicator that might be of why people held off for the month of September, but I'm speculating. So when we look at the year-to-date sales, right? Obviously, we're down from the highs that we have seen over the last 5 years. Calgary went through a pretty wild roller coaster of just new people coming here, both internationally and provincially. And now we're starting to see a slowdown. We're starting to see a little bit more stabilization. We are still above those long-term trends. You can obviously see over the last more depressed years that Calgary is up. And I would imagine we're probably going to stay at roughly in this range as the city continues to expand and more homes are being built regardless, especially with all these multi-level units. Now, when we start to look at the year-to-date sales by price range, I brought this up multiple times. You can see the $1 million plus, they're still seeing a decent amount of activity, right? The luxury market in Calgary is still relatively doing well in terms of demand. Now, you can obviously see a huge drop off of the $400,000 price range, a huge drop off of the, whoa, that doesn't make sense at all. The 3 to 4 year to date to October detached sales. Oh, okay. That was a mistake on my part. So we need to actually ignore this because this should be total residential and not the detached, because you can see total sales here. So if we actually go to the PDF report, because I upload these for free for everyone to look at, I was going to say that did not make any sense at all. We need to go to the total residential number and go to sales. I guess it doesn't really do it, does it? Now I'm scrambling here trying to do this live because I want to do these videos in one take and not have myself scrambling too hard. Where am I going? Year-to-date sales. There it is right here. Okay, so this is what I was supposed to screenshot, but I didn't. Again, I will go back to that. Year-to-date for $1 million plus is still doing relatively well. You can see a massive drop-off from the more affordable products, right? We're seeing a lot more inventory in that space, as well as a drop-off in terms of sales activity. So clearly that lower price range is pulling us back. You can see that the 700 to 800, relatively kind of close to what we were last year. 600,000 saw a drop, and then obviously the 500 and below. So with that in mind, apologies for that. Really happy I caught that because that definitely doesn't make sense for total residential. But here we are recording one-take videos as presentations, and I hope you enjoy it. So when we look at the sales by price range for October, nothing stands out to me here. Nothing too, eye-catching when you look at just the sales for the month of October. When you look at the inventory, right, this is just looking at the month of October. We're almost at the levels that we hit in 2018, right? We are now surpassed the 2011, right? 6,060 6,000 units. Obviously, the city has grown a lot since 2011. I should have actually looked up how many new homes have been built in the last 14 years in the city, because it's been quite a bit. So the fact that we're up to 2011 levels isn't really anything to be like concerned about. The city's going to grow. The city's going to continue to grow, right? If anything, the concerning level was 2023, when we only had 3,000 units available and the sales were through the roof. Obviously, our market was going to explode, and it did. We saw a huge increase in the amount of homes, in the price points. Now, switching over to inventory, looking at inventory available in October, the $500,000 price range is leading that charge. Obviously, you have semi-detached, detached, even some obviously some townhouses in that price range, as well as some apartments. So it does make sense that we do have a lot. You can see that sub 400,000 is mainly just condo apartments. And when you put those two together, it's quite a bit of inventory in this market and not a lot of sales activity. Now, when we look at new listings, right, again, year to date, looking at the entire year, you can see that we are leading the charge, which again, isn't overly surprising. The sales have slowed, the new listings have increased, clearly balancing this market out, putting it more into buyer's territory. And I don't expect this to slow down in 2026. I would imagine in 2026, as a lot of those mortgage renewals come up, which we've talked about so many times, we're probably going to see another increase of year-to-year listings, allowing you buyers to have more choice, but you sellers, you just need to be a little bit more cautious as to what it is that you are pricing your property at. So when we go back to this, right, again, just a nice steady incline of months of supply. I did mention this before. I saw this little spike up here. Wasn't sure. I thought maybe that, and now that it broke the ceiling, we might stay around that 4 months of supply. But with that increase in new sales and that decrease in new listings in the month of October, we did drop back down to that price point, that months of supply that we've seen for the last 4 months minus September. And when you look at everything else, it's falling, right? I'm not going to get into this too much. This is total residential price points for every single quadrant, right? Calgary's still affordable, right? I'll say it, right? Compared to other market centers in the city, compared to the lifestyle that you get and a lot of things that you can accomplish here, the higher incomes that you can earn when we're not at such a high unemployment rate. We have a lot of people move here. I think we're still at just above 7 as Alberta for unemployment rate, but it is still affordable in areas in Calgary. You can still find some pretty good deals in different quadrants of the city. You just got to find them. Okay. If you want to know a little bit more about these individual property types, go ahead, pause the video, read what the Calgary Real Estate Board has written about these individual property types. If you want to have a deeper conversation, book a Zoom call. The Zoom call, the link is in the description. I'm more than happy to have a conversation. If you're looking at making a move in 6-12 months, or you're just wanting to understand a little bit more about the market, book a 30-minute call. Let's have a phone conversation. Let's jump on Zoom. Let's talk about these things in a lot more detail. It's super cool. I really like it. I like diving into the actual MLS, diving into a lot more of the information for your personal situation. It's enjoyable and it's fun, and it's always a mystery to unsolve. So let's continue on here. Now, when we start to look at the individual properties, right, starting to break it down a little bit more, detached, semi-detached, townhouse, apartments, the apartments are definitely seeing some of the most aggressive decreases across the entire city, right? We're down 8% since the highs of August of last year. The townhouses are down 7%. The semi-detached is only down 2%, which is not that much, as well as the detached market is only down by 3.4. So apartment and townhouses are definitely getting more towards correction territory. I would say the detached and the semi-detached are still in that more balanced territory. This is balanced market conditions. Yes, we're seeing $1,700 decrease, or even a $5,500 decrease from last month on a $744,000 home, right? These are not very large numbers. But when you start to, drop the numbers down to 300, which is a third of the price, and you're seeing $4,700 decrease on a pretty consistent basis, right? That's a pretty large amount. I've said this since the beginning that investing into condos in Calgary is just not smart. Unless you are looking at potentially doing an Airbnb, or you have lots of cash and you just want to dump it into something and you're not going to pay all these crazy interest rates. Apartments sure can work, but we have seen so many repeated times of these apartments going up and down at dramatic rates. And the amount of apartments being built now in Calgary is insane. And you're most likely going to continue to see price decreases in this segment specifically, as well as townhouses. This rezoning is being brought to a lot of these homes are now coming to market, right? October, November, after 8-9 months of construction, we're probably going to see a massive increase in inventory. It's going to pull down rents, which are fantastic for renters, but it's not really good for you investors out there looking to try and, you know, make some money and try to grow your equity in Calgary. It had its moment. That moment is past. So just caution. Now, months of supply, right? Looking at this here, you can see, I don't know what the heck is going on in East Calgary, but townhouses are just absolutely on a tear right now. 12 months of supply, very clearly a balanced market for townhouses in East Calgary. If we just do some very quick searches, and we go here, we go townhouses, we go East Calgary, right? Oop, I didn't do it. East Calgary, right? You can see 53 if we just go active, right? Very small numbers, 42 active. We've got 7 pending and sold in the last 30 days, 4. So yeah, very small numbers, but they do add up to 12 months of supply, right? You do have your apartments in Northeast Calgary, right? Seeing 7 months of supply. Your apartments, again, your townhouses in East Calgary, over 8 months of supply. But on the reverse side of things, look at your single family homes. This is very clearly, you know, balanced sellers territory. When you look at a single family home in Calgary, it's still in demand. You're still seeing close to 2 months of supply, right? West Calgary is at 2 months of supply, which is still a seller's market, right? Yes, there is an increase in inventory, but it's not everywhere, right? Semi-detached as well, Northwest, right? Under 2 months of supply, very much a seller's market. So, yeah, you know what? Calgary is definitely going to see a slowdown, but it's not going to be all over the entire city at these dramatic rates that people think it's going to happen. Calgary has been resilient. I would imagine it's going to continue to be resilient. Yes, of course, we're probably going to see 4 or 5% decreases for a little while, a nice steady slowdown, but I just definitely do not see any sort of crash or correction at this point still in this market, right? Especially for these detached and semi-detached segments. So when we look at this, right, obviously there's price decreases, right? So if you look over here, you can still see some, 5% price decreases on these single families. You can see some price increases for the semi-detached, but everything else, apartments seeing massive, townhouse seeing massive decreases across the city. So if you want to know what your home is valued at, scan this QR code. It's super cool. Me and my team are going to reach out. We're going to say hi. How can we help? What can we do to try to help you through this situation? Are you looking to, reinvest in your property? Are you looking to refinance or remortgage your property? Do you just want to know what the heck's going on? Do you want some sort of audit on your house to help figure out where you are financially? We offer those things, right, for free. And they're very simple to do. They're not very complicated. Scan the QR code, go to the website, super slick. I promise it's worth your time. So where are we at with price points, right? Like I've said, yes, there are some price decreases across the entire city. Even West seeing a $24,000 price decrease since last month, dropping from, it was about $960 for the benchmark price down to $944, seeing massive decreases. We are still going to fall going throughout the winter, right? But there is still 2 months of supply, meaning that those, multi-million-dollar properties in the quadrant is definitely bringing those down, right? In my personal opinion, they have such crazy swings in West Calgary. So you definitely want to make sure that you have a really good understanding of what your home is valued at and trying to look at those features and benefits to try to capitalize on that, because there is some pretty wacky increases. This was actually the only quadrant to actually hit 1 million for the benchmark attributes, which was really interesting to see. You can see detached and city center actually saw a $4,200 increase where everything else saw a decrease. Again, looking at just the single family market here. You're going to the apartment market, totally different story. Again, these are pretty large decreases for such small amount, such a small value for a unit, right? Like a $6,000 decrease on a $340,000 property is a lot more than a $7,000 decrease on a $7,000 property, right? It's just the percentage weights there. You can see all the decreases here, right? Moving along to semi-detached and townhouses. Again, semis are actually doing relatively well. Townhouses, not so much, right? You can see Northeast saw $11,500 decrease from last month and an $8,500 decrease before that, as well as a $12,000 decrease again in West Calgary, but the month prior, they saw $9,700. So we're seeing like these massive swings in West Calgary. It's pretty crazy. So this is where you really want to just dive into the data on your actual computer here to make sure that you have a very good understanding of your specific property type in your specific area, right? Sales and listing ratios, inventory, months of supply. We can go over that personally if you're interested. I feel like I'm definitely rambling on now. Now, when we look at this here, I've said this already, right? You can see that it hasn't been a trajectory down or a trajectory up. It's been actually a flat line. This is the first flat line that we've seen in the last 5 years. This is actually one of the most predictable markets in a sense that we have actually witnessed in the last little while. Predictable in the sense that the total residential price point, yes, it's falling at a fairly consistent rate, but it's falling in balanced territory. There are some outliers like the 2 months of supply in certain areas and the 12 months of supply in other areas. But for the most part, Calgary is actually fairly stable, right? Yes, of course, we're seeing some decreases, but we're holding up quite well, right? We're holding up a lot better than what people give it credit for. So with that in mind, yes, we are seeing some declines. We're probably going to continue to see some declines going throughout the winter of 2025-26, right until the spring. What's going to happen in the spring? Who knows? There's a lot of interesting things going on with our politicians right now. And it is very interesting to see how that may affect both provincial and federal. And that could definitely put some, upwards pressure on Calgary. But I think we're probably going to stay in this balanced territory for quite some time. So if you have any questions, you want to go through this information on a personal level, you want to know what your home is valued at, you want to know how to get into the market, what you need to do, how to actually go about it. I do have buyer's guides and all sorts of things in this, in the links in the description. Go ahead. A lot of this stuff is free. Feel free to reach out, ask your questions, have a conversation. I appreciate everyone here. And if you have any concerns, do not hesitate to let me know, because I know that you guys love to comment your thoughts. So thank you very much. We'll see you on the next one.